Good morning, everyone. Welcome to an episode of the Mizuho Week Ahead. I'm Boon Heng, market economist at Mizuho Bank. This week's theme is green. It has been yet another volatile week, with US threats on Greenland at the start of last week being diffused by a US framework deal with NATO. Even amid the taco headlines and rebound, it should be noted that US equities is still lower for last week. In short, this is hardly the start of exuberance. Similarly, with Europe facing trade and geopolitical uncertainty amid trade ties with the US, Euro stocks slipped more than 1% last week. Exuberance, though, was evident in Korea and Taiwan, with equities up 3% last week, with the Kospi breaching the 5,000 mark. Meanwhile, there was significant uncertainty and volatility of long-end GDP yields as initial sell-off on low volumes led to a sharp spike in long-end yields on the back of PM TAIWAN's suggestions of a temporary sales tax cut on food. In the FX space, there was certainly no taco for the dollar as the DXY sank below 98, almost 3% down for last week despite higher USD yields. In fact, this reflects the bout of sell America moves. Admittedly, some of the mid-week steepening of the USD yield curve was driven by the JGB sell-off. The yen was also the underperformer for most part of last week as the BOJ kept rates on hold in the 8-1 decision. But the underperformance saw a sharp reversal on intervention by the authorities at the end of last week as PM TAIWAN warned that they will take all necessary measures to address speculative and highly abnormal movements. The Aussie dollar was certainly the envy in the EM Asia FX space, as it was sent surging above 69 cents as Dell employment print came in stronger than expected at 65K. Undoubtedly, this was a robust print with 55K full-time job gains, even as seasonal effects slightly added the additional 10K part-time hiring. Even as Western Australia may have captured 40% of these employment gains, one cannot easily dismiss the possibility of robust mining sector job gains as noise. Furthermore, overall unemployment rate declined to 4.1% to incite bets on rate hikes by the RBA. That said, a 3.4% headline CPI at this moment may not have hit the bar for an outright hike in February. Looking ahead, the FOMC decision is the headline event for this week, but there will be nothing to see given the lack of refresh projections, as well as political assault accentuating the odds of an independence hold. In Asia, there will be contrasting GDP releases this week. In Taiwan, growth in Q4 could potentially outperform as buoyant external demand dovetails with broad-based services picking up, ranging from financial services to tourism. In contrast, Philippines' Q4 GDP may be due for a rebound from recalibrated government spending and investments, but this is unlikely to incite much optimism as private consumption remains weak. Full-year growth in Philippines will likely fall short of the government's official target and affirm the possibility of BSP easing. In Singapore on Thursday, the MAS will hold firm in the policy stance to keep the Sing near slope, midpoint and width unchanged, especially as inflation in Singapore remains subdued. All in, even amid a tumultuous week of geopolitical tensions, a good dose of macroeconomic stability could still be a relatively firm anchor for EM Asia FX. For more information, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.